Welcome, everyone, to today's webinar, where we will be discussing how technology is driving change and innovation in the insurance industry, with a focus on three core topics: AI and machine learning, legacy technology transformation, and harnessing the value of data. After which, there will be a Q&A session to wrap up today's webinar. So please feel free to drop your questions into the chat throughout this discussion. I will lead off with introductions. My name is John Suminski, and the majority of my career has been working within the insurance industry at both an insurer as well as at a software platform and services company that focused on the insurance vertical. Currently, I'm a delivery executive at Sparq, which is a digital product engineering firm. And at Sparq, we bring trusted software engineering teams that collaboratively solve challenges for our clients in order to deliver business outcomes. And we do this through building powerful digital applications, products, and experiences. I'm pleased to be joined today by Ken Toole, who is the Chief Technology Officer at Vouch Insurance. And I'll turn it over to you, Ken, to further introduce yourself and Vouch Insurance.
Thanks, John. Appreciate it, and welcome everyone to the webinar. As he said, my name is Ken Toole. My background has been about 20 years of leading engineering teams in the SaaS and enterprise product space, as well as AI and ML ops. I'm currently the CTO at Vouch Insurance, and it's great to be here with all of you and have this interesting conversation. Pass it back to you, Joe.
Great, thanks, Ken. We're definitely privileged to have you joining us today, and let's dive into our discussion. So Ken, our first topic focuses on how artificial intelligence and machine learning are being used within your business today and or as part of your future strategy.
Yeah, absolutely, John. And I think as many companies throughout the sort of tech landscape are experiencing, we've just had an explosion of available technologies and innovation in the AI and foundation model space in particular. And Vouch is no exception. Insurance is an incredibly data-rich industry, right? And all insurers sort of have relied for decades on actuarial analysis and collection and use of data to understand the emerging risks in the populations that we insure. And for Vouch, this is particularly acute because our target market is the technology economy and startups. And so we insure many companies that have a rapidly evolving set of risks and opportunities, are exploring new industries and types of products. And so it's incredibly important for Vouch to stay very much on top of and in tune on the data that's being generated out of those companies and the environments that they exist in, so that we can serve those companies well and understand the sorts of risks and hazards that they face. So Vouch has had from its very beginning a significant investment in both collecting public data about the environments in which our clients work in, as well as the data around the clients that we have and what they're experiencing, how they're growing, and what's happening within their businesses. And now we're in the process of really applying some of these recent technology innovations to really gaining deeper insight and to further automating our ability to gain real actionable use out of that data. So it's an exciting time. We work with a number of both our clients as well as other startups that are working in this space. And I'm excited to talk some more about those opportunities.
Great. Yeah, and that very much aligns to kind of my perspective. So I tend to have a keen focus on the application of AI within underwriting and fraud detection in particular, because of the revenue and cost savings potential that it can offer. So if I look at it from an underwriting perspective, the ability for AI to analyze really vast amounts of data and the opportunity to assess risks more efficiently and accurately, of course, that can help improve turnaround times, especially for more complex, products or policyholder scenarios. But as importantly, it can expand potentially coverage amounts and or lead to issuing more policies that might have otherwise been declined if not for the deeper AI-driven underwriting insights, all while still trying to stay within, respective risk tolerances for those insurers. Yeah. And ultimately, this offers the potential for some organic kind of new business growth.
Yeah, it's an interesting point that you raise, because the traditional approaches to understanding the level of risk and where to set limits for coverages and the way that insurers sort of manage that have been kind of what it results in oftentimes is sort of a one-size-fits-all solution,
Yep.
right? So you wind up basically grouping a lot of very different companies into the same risk bucket, essentially, because your ability to rapidly adapt to what's happening in the environment and the data that you're getting is kind of limited to, sort of traditional statistical modeling that takes time and takes some lag in terms of understanding that. One of the things that we really have focused on in terms of applying AI is recognizing that what particularly foundation models gives us an opportunity to do is to describe categories of risk with natural language in ways that are sort of connected to the real world, like what's changing. So, for example, if you are looking to insure crypto type businesses, right? A lot of regulatory changes in the crypto space, a lot of activity that's happening very rapidly that changes the risk profile for those kind of companies. And so the ability that foundation models in particular give us is the ability to basically, in natural language, describe week by week, maybe even day by day, changes in categorization. So companies that do very specific things that have new regulations being applied to them, we can simply specify that in natural language and have the potential to basically assess a company based on all the data that we have on that company and categorize it into the right niche or category. And that flexibility to be able to change the categorization very quickly and at a fine-grained level is absolutely revolutionary in the industry. That's a kind of change that takes most insurers many, many months to accomplish.
Yeah, I totally agree. Going from that, like as you described, static to more dynamic and real time. And so, while staying within AI, let's kind of flip to the other side, fraud detection. So, from my perspective, there are a few interesting use cases for AI to more efficiently and accurately detect unusual patterns in insurance claims data, driving reductions, hopefully, in the number and cost of fraudulent claims. And the first being something you've touched upon, AI-powered natural language processing, really and from an angle of looking at text from various supporting claims documents, such as police reports or medical records, depending on the type of insurance, for any inconsistencies that might be signs of fraud, or perhaps the next use case of AI performing analysis of picture and image integrity to see if there's been any altercations or manipulations, and maybe even going as far as, hey, let's tap into social media to identify any potential collusion or relationship-based situations that might be signs of fraud. So it's very interesting how at different ends of the business, you can apply AI to generate some great either business value on the revenue side or perhaps cost savings.
Yeah, one of the similar type of applications in commercial insurance that we've seen is around sort of cyber insurance. One of the interesting indicators that help an insurer kind of understand what level of risk a company might have involves sort of looking at and evaluating their terms of service, for example, on the website or within an application. And that's information that's publicly available. It's generally published on a website or otherwise. To be able to sort of ingest that information and do an analysis of it against the kind of legal risks that exist for a particular company. Again, to be able to really tailor that down to, okay, you are a marketplace type company working in providing some sort of consumer product marketplace, right? We can basically take your terms of service, your privacy agreements, et cetera, and have a deeper understanding of what sort of risks you might be facing and ways that you're mitigating those risks. And that helps us as an insurer better understand what sort of coverage and level of coverage that you need without having to ask you a 150 question sort of application, which many companies have experienced in commercial insurance. And it's really a big reason that we want to leverage both publicly available data and then our ability to analyze and understand that data using artificial intelligence is to streamline and smooth the process of actually getting the right coverage at the right price with the right limits for specific clients.
Well, this is an exciting topic, and I bet we could talk about it for a long time, but I am going to move us on to our second topic. And while our first topic started with current technology trend in AI and ML, our next topic brings us back to some of the realities and burdens of the past. Outdated legacy systems hinder agility and innovation, while modern cutting-edge technologies can offer competitive advantage. So Ken, what types of modernization initiatives are included in your technical roadmap?
Yeah, so Vouch, like just about every startup that I've experienced, started from a place of innovation and really trying to explore and build a capability that wasn't there before. And when you go through that process, you tend to build up a fair bit of tech debt as you're trying to rapidly move through understanding sort of how do we meet the market need, how do we get product market fit. At Vouch, we experienced, like many other companies, an approach that was taken early in the stages of the company to build what was a monolithic application. Because we really didn't understand the breadth and scope that our business would take over time. And again, that's incredibly typical, and it's a pretty effective approach generally in the early stages of a startup. But for us and many, we're now at a place where we need that piece of technology to meet many different needs. And that generally sort of moves us in the direction of saying we need a more distributed, service-oriented architecture that allows us to, in parallel, iterate on different aspects of the system, rather than have them all sort of tightly coupled into the monolith. Now, we may pull off a piece of capability. For example, we might say, hey, we need to work on our quoting, our automatic quoting model. And we may build another monolith. So there's nothing wrong with the monolith development approach per se, but the scope of the monolith needs to change over time as your business expands. And so we're very much in this decomposition mode right now, as well as building new and more generalized capabilities that meet a broader spectrum of needs across our business.
So while you're approaching this from your current lens, more on the startup side, let me take this from a different perspective. And we know application modernization, it's not a new priority. But for some, especially the tenured insurers, the need and perhaps the pressure to address legacy systems is increasing because of the implications to supportability, business agility, if not growth overall. And at one end of the spectrum is the mainframe, which is still in use, like I said, for some of those more tenured insurers. But even legacy client server systems cause kind of similar burdens on cost to maintain, constraints in supporting business innovation. And while part of what you're describing, Ken, but while there's options to solve these legacy application modernization needs through whether it's replatforming, refactoring, containerization, rewriting, just to name a few options. And they're all viable approaches. They tend to be the more complicated IT projects with challenging ROIs. But again, particularly in this space with the more tenured insurers, the challenges of these legacy systems do not typically age well, and they have direct impacts on innovation. So, much like you're already getting ahead of, definitely see application modernization projects increasingly being part of most technology roadmaps in the insurance space.
Yeah, and I think it oftentimes is a complicated equation for mature businesses to work through, because there's both the maintenance and sort of operating cost of the legacy system that you have to take into account against the investment you're going to need to replace it or modernize it. But what many companies struggle to capture and really quantify is the opportunity cost. And one of it is really sort of a set of fairly definitive studies that have been done in the insurance industry around the financial impact of speed of iteration. Because the risks in the natural world are changing rapidly, insurers that are able to adapt to those changes more rapidly have better financial outcomes. And there's an opportunity cost there to be had, which I think we now have better access to quantifying than maybe we did 10 years ago, around sort of your legacy systems slowing down or being the cause of a slow iteration as you look to improve or modify your insurance products. And so this is something we spend quite a lot of time looking at, and is a key value proposition within our approach to technology. We match the investment against the financial outcome that we think we can get based on improving the speed and agility. Because as an insurer, you have to react to the real world. That's just the reality, or you will see your loss ratios balloon, which many insurers have over the last couple of years as well. So if you're unable to react, you have a real deficit in your business, and you're a bit at the whim of the world you don't control, which is not a great place to be in the business.
Agreed. And I really think it's such a smart point, opportunity cost, because you're right. Historically, again, for existing legacy systems, the cost to maintain, the cost to modernize or transform are all, fairly easy to quantify. And then there's a point where some might say, well, maybe that's too much for us to do right now. And the conversation can stop. And you miss what you described, which is the opportunity cost of either delaying or doing nothing is actually fairly significant, and it could put you behind from a competitive advantage perspective in the industry. And I agree with you. I think that mindset is now coming to the forefront of there's this other part of the equation around how are we going to be limited in terms of what we could do going forward, and what does that mean to our business growth?
Yeah. Yeah. And on the investment side too, there's a fair bit of nuance, because oftentimes companies will approach us saying, well, we have a mainframe system, or we have a legacy client server system, and we're going to think about the investment to replace it. Right. And in my experience, having been through sort of modernization efforts at both in technology stacks I owned in large companies, as well as supporting banks and insurers in their process of doing this in other environments that I've been in, the reality is there are usually some incremental options, and that you often can reduce the size, scope, and complexity of the monolith or the legacy system by adding new components in and around it. And so oftentimes, and I challenge engineers generally to say, like, our jobs in these kind of companies are to provide options. And usually that means, options with an S, not one option, right? And I tell business leaders, it's like, look, if you're getting one option from your technical leaders, you should press them a bit, because there are almost always other approaches that should be considered. And oftentimes what that affords a business is some checkpoints where you can accept a certain amount of investment. It's going to take you a certain distance, and based on the outcomes there, you can determine when and how to proceed from there. And so finding an incremental approach to resolving some of these issues, I think, is critical for companies to manage the investment wisely.
That's a great point. It's not big bang. It doesn't always have to be big bang and these huge capital and time intensive initiatives. There's different ways to get to the same outcome. So I totally agree with you. All right, let's move on to our third topic, something we've actually organically talked about so far in our first two topics, and that's data, something that most insurers have a lot of. And so we're going to focus on how data is being used as a business asset. And specifically, data and analytics can provide valuable insights that can shape business strategies, improve risk management practices. So Ken, what types of data initiatives and which parts of your business are you pursuing?
Yeah, all of the above would be traditionally, like, companies, and particularly in the financial industry overall, and specifically within the insurance industry, have viewed data as critically important at certain points in the life cycle of a product. So they really sort of, there's understanding, like, of course, actuary and sort of risk analytics is one piece which we look at. Typical business analytics: how does your sales cycle operate? How are your financial flows occurring? All kind of important to just operating a business. But those are all kind of back office use cases, so to speak. They're ways in which experts within a particular domain in the company utilize data to make decisions. And that's really important. It's very important that you have the right quantity and volume and the right, cleanliness and effectiveness of that data, and then access to it for the experts that need to use it. So that's all important, but I don't think it stops there in the modern time, because what we see is really the advances in AI that we talked about before, I think, more readily give us the opportunity to extend the value of that data right out to the client or the customer, right? And really at Vouch, we're looking at a lot of the different ways that we can apply the data we have and that we use for those analytics purposes to improve the experience and the value that we deliver to our clients directly, right? So for example, in the insurance, one of the major sources of data like it or not, involves a lot of legal documents, PDFs, PDFs, and PDFs everywhere, right? And that data tends to be fairly locked up, not readily available, also difficult to consume for the client and the consumer. If you've ever sat down and read your insurance policy, good luck to you if you got past page 2 or 3. Generally, like, you usually say, somebody tell me what this says, right?
It's a great
Those are
way for those with this insomnia to cure it.
right. If you're really trying to get to sleep, that might be a good approach. um, we really believe that there is an opportunity, and look, Vouch's history is, we started out working with the earliest stage founders, the engineer building a company, right, and at seed stage. These are not folks who want to spend a lot of their time on figuring out their insurance needs, and so we have a real empathy for the client, the business client, who doesn't need to spend that much time digging through this and is not a lawyer, right? And so we really see a lot of opportunity to provide better value-added experience for our clients by making things understandable for them through LLM technologies, foundation models, and so forth. And like I mentioned and kind of alluded to earlier, really, really a lot of activity here around streamlining and making much simpler the process of applying for insurance, right? And renewing insurance. We at Vouch just recently launched our Horizon product, which is focused on more mature and growing startups that are larger businesses. And one of the challenges we see there is that it quickly becomes more complex. You have more people involved in the process. And we see a lot of those kind of scaling startups with really poor insurance coverage. They either have, duplicated insurance coverages that cancel each other out. They have, limits with a retention that's almost at the limit, for example, and a lot of just, incorrect insurance that's the function of people moving fast and trying to do a complex task. And so we really believe that leveraging the data we have and understanding who our clients are and the areas that the industries they operate in will allow us to streamline the processes of interacting with them, make it much easier for them to apply for and understand and evaluate the insurance that they have. And I think that that's what's revolutionary for us. Lots of incremental improvement in the back office stuff and things that are important to focus on there, but really taking it all the way out to the client experience is where the value is.
I couldn't agree more. And we started this with data offers an opportunity for insurers to leverage information as a business asset. And I feel like that's a lot of what you're describing. And I guess the spin I put on it, in line with what you've been describing, is to offer highly personalized products and services to their customers. And as you mentioned, we briefly touched upon this in the underwriting process, where you can provide insurance coverages to people or businesses that might otherwise be excluded or cost prohibitive due to the general risk formulas and factors. But what's also interesting of recent are trends and capabilities like integrating IoT. So whether it's wearables, tracking customer behavior, location data, all augment historically static and point-in-time data with, again, Ken, you hit this before, more dynamic and frequently updated customer information, which can be used to manifest into product pricing, streamline customer service, transaction improvements. You were talking about even applying for insurance, all of which serves to better attract, retain, and even in some cases reward customers.
Absolutely. And you bring up the point of IoT and sort of the use of real-time data to understand the client's environment and kind of what's happening, what their activities are. I think this is one area of all the areas where we talk about sort of data capture and data collection and the use of that data. This is one area where I think it's really very advantageous to the customer, to the consumer, to be able to share some of that information with their insurer, because the insurer is going to be able to tailor the coverage down. And one of the things we see in commercial insurance a lot is that traditional commercial insurance, again, it's kind of the one size fits all approach. What often happens for many companies is they are paying for coverages they don't need, because those things are sort of blocked and bundled together by traditional insurers, and they're paying to cover risks that they don't even have. And I think that the more information that the insurer can gather and understand about that client, it allows us to actually tailor that and make a better deal with the client. So I think there's really value for the client and having that information available and for their insurer to actually use it. The other thing I will mention here is that, one of the things that we really focus on at Vouch is not only just providing an insurance product, but being a risk partner and really helping startups and our target market, the customers and clients that we serve, to avoid the risks. Because, I mean, insurance is great. It's important for you to have that. Would be even better for you to not encounter those risks, right? No one really wants to have a claim.
Right.
And so, we really look at those opportunities to understand more about what's happening within a client's environment. Gives us an opportunity to share information and ideas with them that help them avoid the risk to begin with, which is in both of our best interest, right? And so I think it's very much a win-win situation that these technologies are increasingly giving us access to do really effective things.
Yeah, I think that's really savvy. The shifting the dynamic from let's react to the risk that you're hoping to avoid, but you're protected if it were to occur, to have that in place, because that's smart. But let's also actively work to avoid the problem from actually occurring, the actual manifestation of the risk. I think that's really very interesting that you have that approach.
Yeah, it was a big reason that I chose to join Vouch, frankly. I mean, this is my first insurance industry kind of role, but really like the fact that Vouch has a commitment to startups and entrepreneurs succeeding and avoiding the pitfalls that come from the kind of risks that you experience in a business. And really, that's at the heart of what we're about. And it's why we thought, hey, this is a space that needs more attention. And that's why our founders sort of said, this is the right opportunity for us.
Excellent. Excellent. All right, Ken. Well, these have been some great insights on our three topics so far. It's time now for us to transition into the Q&A portion of the webinar and hear from those who are attending today. So Laura, if you wouldn't mind reading out our first question, please.
Sure. Thanks, John. First question for you both. What is your advice for insurers that are just starting to explore the use of artificial intelligence?
Yeah, it's a great question.
You want to kick off?
Sure. Yeah, absolutely. And it's something that I've spent quite a lot of time talking to peers across different industries. So I think this advice probably spans beyond just insurance, but I think companies that are really starting to explore, leveraging artificial intelligence in their core business processes, there are a couple of things to think about. So one is to determine kind of what is your corporate stance on the leveraging of AI. It's important for employees, I think, to understand, are you looking for them to be aggressive and innovative because that's a stance you've chosen to take from a company perspective? Or are you being very targeted, saying there are a specific set of value that we want to explore delivering? So I think being clear about what your stance is with relation to leveraging these technologies as a company is important. It will help the folks that need to incorporate new ideas and information understand the context. The second thing I would say is account for experimentation. Right. So this area is rapidly expanding. There is a lot of innovation taking place in it, and it tends to take people a little bit of playground time to understand how to actually use these technologies in an effective way. So, my advice and what we've done at Vouch is we sort of cordoned off a period of time and a set of folks to really do pure research, more or less. It's like, just go play with these technologies applied to a certain area that we're interested in, and let's see what comes of that before we begin to productize. So I think I would sort of encourage folks to be experimental in your approach to how to leverage these technologies, and then pull the selected ones that look promising to you and organize those into a project to go deliver. So I think those are some of the important aspects that I'd point out. John, anything that you'd add?
Yeah, I couldn't agree more, and I'll actually pick up where you just ended. When you've made it past that, playground and exploratory phase, I do think, perhaps stating the obvious, starting small with a very targeted objective at that point, being clear on what you want, ideally, having a fairly good data quality. You don't necessarily need to get into the complicated edge cases. Get a foundation under your belt as you actually really start to, as you described, productize or really bring this into your business. But then also, given that this is insurance, be aware of regulatory requirements. Stay in bounds with how you're allowed to or not use data, so that again, you don't have any unintended consequences.
Yeah, and I would maybe add that in your experimenting, don't forget that normally sort of acquiring the value you can get out of these kind of technologies involves integrating them into other parts of your technology landscape, right? And so if you're too insulated, you look at just applying an AI model or taking some data and using an LLM prompt to get some information out of it. Don't delay in bringing some of your application developers into that conversation, right? They need to also understand what's happening under the covers and how might they leverage it? How do I get it into a web application, or how do I get this into, a business process flow, right? So oftentimes I've seen, for frankly 10 years, companies experiment with AI, build models that seem exciting, they can understand a value prop, and then hit a brick wall of actually integrating it with their business process, right? So I would just encourage folks, don't underestimate the need for your mainline product development leaders or key technical people to be building their comfort level and understanding of this as well.
Yeah, excellent point. Excellent point. All right, Laura, our next question, please.
So what factors do you consider when deciding when to pursue an application modernization initiative, especially of core administrative systems?
Yeah, so I can give you some thoughts on this one, and then John, I'd love to hear your thoughts as well. So I think one of the things I look at is the cost of maintaining that legacy system. So as a criteria, if you see that, and we've even seen this in our short lifespan, frankly, is you have certain components of the system that just generate a lot of defects or friction in your business process, right? So it's problem solving, essentially. If you identify a problem, that's a place to be, and to say, okay, I can either band-aid this yet again with some point solution, or I can sort of adapt to the fact that, hey, this has been a perennial problem. We probably need to rethink the overall platform here. So I think that's one. And then the other one is the opportunity cost, like I said, which is, where are fixes to a legacy system simply not going to meet your business needs, right? I think the more you can kind of line up against a clear understanding of what your business needs from that piece of technology and what the gap is between your legacy system and where you need to be, that helps point you in the direction saying, yes, this is a place we should undertake a more significant effort.
Yeah, I couldn't agree more. And some of what I'll say is just doubling down kind of on your points, but kind of look at it from two heat map perspectives. So technical heat map, what are we dealing with? Are we dealing with some extreme like end of life scenario? Is it support issues, as you made reference to? Is it extensibility challenges that are prohibiting some of the growth or business innovation that's desired, which leads into the second heat map, business. So, this is not, these modernizations, as we've talked about, of legacy systems are not just pure tech. It ultimately comes down to, what is this impact? What is the impact to the business? What are the opportunity costs, as we've talked about? So is it a cost issue that's impacting the business? Is it a growth burden? Is it both? Those are key, and those inputs feed into the evaluation of the cost to maintain versus the cost to modernize and the resulting ROI. And as we've talked about, this important factor of opportunity costs are all part of the equation to decide what to do and when.
Yeah, one additional factor we hadn't really addressed earlier, John, to consider here is risk of failure, right? So oftentimes particularly with really legacy systems, you'll get to a point where that system is serving a critical path function within the business, and its failure is something that will be very difficult to recover from. I mean, to the point of, there's no expertise in that system left, or the hardware that the thing runs on is difficult to replace even. So you do have to also sort of factor in the threat of that system failing and the cost and effort to try and prop it up. Honestly, you oftentimes may be avoiding investment now because it's good enough.
Right.
But by delaying that investment, you are incrementally increasing the risk to your business of that thing failing and you having no solution in place to cut over to. So I think that I've been in some situations where that was really the tipping point factor that led to the investment needed.
Yeah, totally agree. And the comment I made before, these problems do not age well. I think you're describing exactly that. All right, Laura, I think we have time for about one more question. If you have a third.
What are a few important factors that enable a differentiating realization of business value from data initiatives?
Yeah, it's a good question. Depends on the business, I think. And I do think that to be successful with implementing these kind of technologies, like many technical endeavors, frankly, you have to have a good aiming point, something a good clear objective of what is the business value, the business advantage we're shooting for, and then sort of tailor the efforts to that. But I guess, there's kind of at a high level, there's a few categories, right? So you can either apply these technologies in a way that's intended to streamline or reduce cost, make your business more efficient, sort of impact the speed and effectiveness of doing the same things you're doing now. There are other applications, and that's a lot of times in the insurance industry, we see those kind of applications. I've seen those for years where we're leveraging AI and other advanced technologies to make our risk decisions more precise and faster, to avoid errors, to speed up or better prioritize the work of our brokers and agents, for example. These are all things that internally can improve the cost and speed and efficiency of your operation. So there's kind of that category. There's another category which is really net new business value, right? Delivering some functionality or capability to your customers that you don't deliver today and can't be delivered without these advanced technologies. And I think there are room for those. They tend to be a little bit less frequent in the insurance industry, at least, but they are there. And, we see the opportunity to, pre-fill applications, interpret and predict answers that a customer might have and give them some suggestions where appropriate and where regulatorily supported. Being able to ensure that any information a client gives us, we can actually leverage that throughout their relationship with us appropriately, not ask them the same questions twice or 3 times or 4 times sometimes. So a lot of those kind of features are things that we can deliver directly to the clients. So yeah, kind of top line and bottom line type categories, I would think.
Yeah, if I add in here, looking at it maybe closer to the delivery side, I like what you said. Again, clear objectives, I think is a critical component. But then also looking at the data and the quality of that data. So the data that you plan to utilize, what level of quality, how reliable is it? Do you need any data governance to just ensure that the results can be trusted? And then again, sources. What sources? Certainly internal, but then again, we've talked about tapping into various sources of external data. So what are your data sources going to be? And then wrapping around all of this is some of the tooling. What's the right tool to help your particular organization accomplish its objectives? And that's just to name a handful.
Some of the most interesting AI-driven tooling that I've seen in the market recently, it's really AI applied to data management, right? The process of acquiring, cleaning, sorting, making sense of, really making your data assets usable. There's actually very good AI technology being developed by a number of different companies to really streamline and improve that process, which is a difficult and arduous process at scale. Like, companies have to invest quite a lot of money in the efforts and teams and infrastructure necessary to bring data together and make sense of it. And those are areas where I think there are a lot of really interesting innovations being applied. And ones that are worth looking at, particularly for mid-sized to large-sized companies.
Yeah, and I hope this doesn't come across cliche, but most businesses are information businesses. Data. We talked a lot about data, but there's most businesses, so much of what underlies them is some form of information to support their business, their customers, their services. Yeah. Well, great. With that being our final question and us kind of bumping up against our time here, let me close by thanking everyone for attending today, and especially thank you, Ken Toole, CTO of Vouch Insurance, for your great insights today. It's been a fun and engaging conversation. And with that, that concludes our webinar today.
Thanks very much.
Thank you.